All right, listen up, folks. We're talking about Walmart, WMT. This isn't just some mom and pop shop. This is a global behemoth, a titan of retail that has shaped how America and much of the world shops for decades. The aim of this deep dive, this financial X-ray, is to figure out if Walmart stock is a long-term winner for your hard-earned cash. Is it a sleepy giant, or is it a nimble colossus ready to keep growing and delivering for investors? We're going to dissect this company from top to bottom. We'll look at its strengths, and believe me, there are plenty, but we won't shy away from its weaknesses either. So buckle up because we're going on a serious ride through the world of Walmart. Let's get right into the meat and potatoes, the good, the bad, and the sometimes ugly of investing in Walmart. First, the pros, and boy are they significant. We're talking about unparalleled scale. Walmart's purchasing power is legendary. They can negotiate deals with suppliers that smaller players can only dream about, allowing them to offer those everyday low prices that keep customers flocking through their doors or clicking on their website. But hold your horses, it's not all sunshine and rainbows. There are cons, real risks you need to consider. Competition is absolutely brutal. Amazon is a relentless innovator. Costco has a cult-like following. Target keeps upping its style game. Alright, let's throw Walmart into the ring with its biggest rivals. This is where the rubber meets the road. First up, the 800-pound gorilla, Amazon. Jeff Bezos built an empire, and they are Walmart's #1 frenemy. Next, let's talk about Costco. These guys are a different beast altogether. Their membership model creates incredible customer loyalty. Then there's Target, or Target if you're fancy. Target has carved out a brilliant niche for itself by focusing on style, design, and exclusive owned brands at affordable prices. So, where does Walmart stand in this slugfest? Walmart's strength is its sheer reach and its focus on being the lowest cost provider for everyday essentials, especially groceries. They are the king of one-stop shopping for many families. Alright, enough with the chit-chat, let's get down to brass tacks. The numbers, the financials. This is where you separate the contenders from the pretenders. First off, revenue. Walmart is a revenue machine. We're talking hundreds of billions of dollars a year. Now profit margins. Walmart operates on notoriously thin profit margins, especially in groceries. What about debt? A company this big often carries a significant amount of debt to fund operations, expansion, and investments. And finally, the sweet stuff for us income investors, dividends. Walmart is a dividend aristocrat. That means they have increased their dividend every single year for over 25 consecutive years. That dividend check hitting your account is a beautiful thing, isn't it? Booyah! Section 5, Crystal Ball Time, Walmart's stock trajectory, 2030, 2040, 2050. Alright, let's gaze into the future. Where is Walmart headed? What will the retail giant look like in the coming decades? What can we expect from WMT stock by 2030, 2040, and even the distant horizon of 2050? The future is full of possibilities, and Walmart is poised to navigate through them. By 2030, I see Walmart solidifying its position as a true omni-channel powerhouse. This means seamlessly integrating online and offline shopping experiences, making it easier for customers to shop however they prefer. Fast forward to 2040. The retail landscape will likely be vastly different. We might see stores that are more experiential, offering unique in-store experiences that can't be replicated online. We could see even more automation in stores and warehouses. Think robotic stockers, cashierless checkout becoming the norm. This would not only improve efficiency, but also enhance the customer experience by reducing wait times and ensuring shelves are always stocked. Now let's jump to 2050. Imagine a world where technology has advanced beyond our wildest dreams. This is deep future, folks. We're talking about a world we can barely imagine. The possibilities are endless, and Walmart will need to stay ahead of the curve to remain competitive. We're talking about a world we can barely imagine. From advanced AI to new forms of retail technology, the landscape will be ever-changing. For the stock to thrive into 2050, Walmart needs to be a perpetual innovator, not just a follower. This means constantly exploring new technologies, adapting to changing consumer behaviors, and staying ahead of market trends. Don't bet against a company with this kind of scale and determination, but always keep your eyes wide open. The future is uncertain, but with the right strategies, Walmart could continue to be a dominant force in the retail world for decades to come. Section 6. Back to the future, Walmart's IPO gold rush and historical wins. Let's hop in the DeLorean and go back in time. Imagine it's the dawn of the 1970s, a time of bell-bottoms, disco, and economic change. Amidst this backdrop, a retail giant was about to make its mark on history. Walmart's initial public offering, its IPO, was way back on October 1, 1970. This was a pivotal moment not just for Walmart, but for the retail industry as a whole. The stock was offered at $16.50 per share. For many, this was an opportunity of a lifetime, though few could have predicted just how monumental it would become. There have been an incredible 11 two-for-one stock splits. Each split effectively doubled the number of shares, multiplying the wealth of early investors exponentially. That means an initial investment in just 100 shares at IPO would have blossomed into a staggering 204,800 shares today, not even counting reinvested dividends. Imagine the financial security and opportunities that could bring. The historical returns for Walmart have been, in a word, phenomenal, especially in its early decades. The company's growth trajectory was nothing short of meteoric. From its IPO through the 1970s, 80s, and 90s, the stock was an absolute rocket ship. It soared to heights that few could have imagined, rewarding those who believed in its vision. The key takeaway from Walmart's history is the incredible wealth creation that can happen when a company has a winning business model, visionary leadership, and executes relentlessly over decades. It's a testament to the power of strategic growth and the impact of innovative retailing. Section 7. The $1,000 question. Can Walmart stock hit $1,000 by 2050? Alright, let's tackle the big one. The question that gets pulses racing. Can Walmart stock, WMT, reach $1,000 per share by the year 2050? This is a question that has intrigued investors and financial analysts alike. Walmart, being one of the largest retail giants in the world, has shown remarkable resilience and growth over the years. But can it really hit that magical number? For WMT to hit $1,000, several things would need to happen. The company would need to innovate continuously, expand its market reach, and adapt to changing consumer behaviors. This means not just maintaining its current growth trajectory but accelerating it significantly. First, the company would have to sustain significantly better earnings growth than it has in the past decade. This involves not only increasing sales, but also improving profit margins. Walmart would need to leverage technology, enhance its e-commerce platform, and possibly explore new business ventures. Think about the market capitalization. For Walmart to reach a stock price of $1,000, its market cap would have to skyrocket. This would place Walmart among the most valuable companies in the world, a feat that requires extraordinary performance and investor confidence. At $67 per share, Walmart's market cap is already enormous, in the hundreds of billions. So what's the verdict? Can it really achieve this ambitious target? Reaching $1,000 per share by 2050 is, in my opinion, a very, very optimistic scenario. While it's not impossible, it would require a perfect storm of positive factors, including sustained economic growth, favorable market conditions, and exceptional company performance. More realistically, continued steady growth, more stock splits to keep the share price accessible, and consistent dividend growth are more probable outcomes. Walmart has a strong track record of rewarding its shareholders, and while a $1,000 share price is a lofty goal, steady and reliable growth is a more achievable and sustainable path forward. Section 8, the final checkout. Is Walmart a buy for the long haul? So, we've put Walmart under the Wall Street microscope. We've looked at its massive strengths, its scale, its brand, its push into e-commerce. We've also stared its weaknesses in the face. The brutal competition, those paper-thin margins, and the constant pressure to innovate. Looking out to 2030, 2040, and even 2050, the path for Walmart is one of adaptation and evolution. So, what's the final Cramer call? Is Walmart a buy? For the conservative, long-term investor looking for stability, income, and a company that's a core part of the American economy, Walmart still deserves a place in a diversified portfolio. Just do your own homework. Booyah!